This is Alan Farley from FX Empire. Dow component Cisco reports earnings after Wednesday's closing bell. Now looking back, Cisco posted an all-time high in the 80s back in 2000 and then sold off right straight through to about 2008, 2019. And right here are Fibonacci retracement levels from that decline. As you can see, the stock got up to the 618 retracement in 2019 and it's still testing that level 2 years later. Now, a fairly strong uptrend ended right up in the upper 80s and in the upper 50s in 2019, giving way to a very substantial sell-off, dropped the stock to a 2-year low during the pandemic. Now, recovering this sort of 1, 2, 3 pattern with this higher low in at the end of October, start of November. It's performed very well since that time. It's risen about 25% year to date in 2021, and now we're about 3 points from this prior peak. Now, I think there's a good chance that the stock's going to stretch into this prior peak, perhaps as early as this evening. But if you expect a big move with Cisco, you're probably mis-expecting, because it's generally a slow-moving stock. So 2 or 3 points into a prior peak is a pretty big move for the stock. Now, Cisco has not missed an EPS estimate in 5 quarters, so I think it's going to match its numbers somewhere around 80 cents per share. But what are our expectations in the future? Well, not too much. I think we can get up to this high, but I think you're going to have to be patient if you want to get even higher. Looking down at on-balance volume, as you can see, we have good buying power. It peaked here in 2019 with price, heavy distribution into October, and then we've recovered right back up to this resistance line as we head into that report. So this is kind of good. We could get a breakout here, and that breakout will bode well in the future for the stock to get up in the 60s, get a little bit closer to that 2000 peak.